Hi, my name is Liz Hawker, and I am the Managing Director of New Listings and Capital Markets at NASDAQ. I work with private companies throughout the Southwest United States on IPO planning and execution. NASDAQ is dedicated to advancing corporate leadership. We offer the latest governance insights and actionable intelligence for board members and executives. We are proud to be a sponsor of the 2020 Summit Director and Officer Corporate Governance Conference. That said, it is my honor to introduce Max Yzaguirre. Max is the executive chairman of Forbes Brothers Holdings, which is the largest privately held electric transmission and distribution construction company in Canada. During his tenure at Forbes, Max has led the acquisition of 3 companies that form the foundation of Forbes Brothers USA business platform and has driven significant expansion in its revenue and job creation. Max also serves on the board of directors of BBVA USA Bankshares, Inc. and BBVA USA Bank, where he is the chairman of the Audit and Compliance Committee and a member of the Risk Committee. Max is formerly the chairman of the Compensation Committee. Max has over 30 years of leadership experience in domestic and international business, government and law, and expertise in a wide variety of industries and sectors, including electricity, oil and gas, banking, real estate, telecommunications, and private equity. Max, thank you for being a speaker at the conference today. Welcome.
Thank you, Liz, for the introduction. And I also want to thank our sponsors as well as the organizers of this conference. This conference is very timely since, with it already being December, I'm assuming that most of us have turned our focus to what we want to accomplish next year. I've been asked to share my thoughts about key issues for board agendas for 2021. Predictions are always tenuous, but the hangover effect of the challenges that we've all faced during 2020 makes the trail very foggy for most of us as we try to anticipate what we should be focused on during 2021. Personally, my focus areas are from the perspective of the 2 boards on which I'm currently serving and Liz mentioned. One is a financial services company, BBVA, and the second is a utility services company, Forbes Brothers. For 2021, the most pressing issues that are on my mind are credit and counterparty risk and cybersecurity risk. Additionally, I believe the top line revenues will continue to be pressured for a good part of 2021, putting an increased focus on cost management and innovation. Now, that's not to say that there aren't other important issues to consider, such as the continued importance of ESG, as evidenced by NASDAQ's bold announcement earlier this week. But I'm going to focus upon issues that feel more existential to me as we enter 2021. Of course, as challenging as this year's and next year's environment might be, one of our key roles as board members is strategic planning and looking for new opportunities. On the opportunity side of things, the main opportunity that I'm focused upon is digitalization, which had certainly been well underway before this year, but which has been accelerated because of the pandemic. But my focus today will be on the key issues that we should consider during 2021 instead of some of the emerging opportunities. There are a half dozen overlapping topics that are on my mind for both of my boards. The first issue is the credit and counterparty risk that I mentioned earlier. Next are cybersecurity and remote working issues, including the internal controls implications of having our employees and our third-party contractors and service providers working remotely. The next set of issues on my mind come from an obvious source: the issues that are arising from the ongoing pandemic challenges that we're all continuing to face. My remaining 3 issues are business continuity issues that have arisen in the current environment, supply chain disruptions, and director and officer liability considerations. Now, most of those topics would take up the bulk of my allotted time today just by themselves, so I'll just hit some of the high points. In terms of credit and counterparty risk for 2021, the relief that was provided by government programs during 2020, although very helpful to many of our customers and counterparties, resulted in a lack of clarity about our real level of credit risk. We all had to rethink how to monitor counterparty risk by seeking to understand whether the government stimulus programs somehow masked potential problems in the financial health or financial outlook of our counterparties. In the area of cybersecurity and remote working issues, including the internal controls implications of having more employees and third-party service providers working remotely, we've seen that, as always, the bad actors have sought to take advantage of perceived opportunities that have arisen from the changes that we've all had to make in our business models and workplace practices. The bad actors target both technology and people, so we need to account for both of those attack vectors. Also, during 2020, everyone's internal controls over financial reporting were tested due to the changes that occurred in all of our businesses. That will be an area of continued focus for at least the first half of 2021, since, as I'm sure that most of this group knows, financial reporting problems often arise during times of economic challenge. Since it appears that remote working will continue for some time, we will have to continue being vigilant about whether that modality is creating holes in our internal control environments. It is unclear how far into 2021 we're going to have to deal with the rest of the challenging mix that 2020 brought, but that mix can certainly create enhanced risks of internal control deficiencies and fraud. Audit committees will need to work closely or continue working closely with their internal and external auditors to remain informed about these challenges, as well as any new critical audit matters that are raised by their external auditors. Now, I don't want to spend too much time today on the pandemic-related issues that we all faced this year, but there are going to be some ongoing considerations for 2021 in the areas of pandemic challenges and business continuity. Until some of the recently announced COVID vaccines are widely available, we're all going to continue being challenged with the responsibility of keeping our employees and customers healthy and safe. We will have to continue to monitor the reputational risk and potential legal liability that accompanies any decision about reopening our offices and businesses. Also, there will be ongoing business continuity concerns during a good part of 2021 that arise from having in-person meetings of our boards and senior management teams. An infection that broadly affects either a board or senior management team has the potential of creating a big disruption for that business. In the case of my boards, we've decided, because we've not really detected a meaningful impact on productivity, to ask our office staffs to mostly work remotely. Now, of course, those considerations are very different for our employees who work in our bank branch facilities or on our construction sites. Most of those employees cannot work remotely or work from home, so safety protocols that align with our industry standards and our own internal standards will continue to be monitored, along with productivity levels. In terms of supply chain disruptions, many of the major suppliers of electric power poles are located outside of North America, which has increased the supply chain disruption risk for utility services companies. On the financial services side, we've also had to reassess operational resilience plans with enhanced scrutiny and review our own third-party relationships with suppliers such as call centers. That has caused our management teams to rethink the traditional way that we approached time and cost considerations and to monitor changing customer preferences. For my financial services board, the other 8 topics that are on my mind for 2021 are risk management, macro and policy, digital strategy, distribution landscape, financial resiliency, operating model and cost management, new ways to work, and of course, ESG, specifically purpose and values. Now, again, each of those topics could take up the bulk of my time by itself. So I'm just going to hit a few of the topics and a few of the high points. For risk management, this year brought a lot of challenges to our risk management approaches in financial services, and many have the potential to carry forward into next year. If there are continuing government stimulus programs or ongoing lockdowns during 2021, we will have to remain vigilant to ensure that our management reporting systems are delivering sufficient warnings about their impacts upon our credit risk outlook. Another challenge to our risk management frameworks during 2020 in financial services came from the introduction of CECIL, the current expected credit losses standard, which was one of, if not the biggest accounting changes ever for financial services. And of course, it ended up being implemented in the midst of the pandemic. Many financial services companies had to rebuild or recalibrate their models to modify the variables or scenarios that are incorporated in those models. And everyone saw how their company's credit loss and other forecasting models fared during COVID-19. So during 2021, we will need to continue enhancing our forward-looking integrated risk management coverage by all 3 lines of defense. Macro and policy issues have been and will likely continue to be a real roller coaster. There seems to be no end to macroeconomic, geopolitical, and policy changes affecting financial services, all of which affect our thought process as board members. Some of the ones that will likely be top of mind for all of us during 2021 are the COVID recovery rate, the availability and acceptance of vaccines, the Federal Reserve's interest rate policy, which doesn't appear likely to change anytime soon, the unemployment rate and the pace of our economic recovery, governmental support, both fiscal and monetary, and of course, this year's elections, which will have an effect upon tax policy and trade policy. The digital arena will continue presenting both opportunities and challenges. The pandemic accelerated the shift to digital channels for financial services, and so we had to keep pace with our customers' digital demands. For the foreseeable future, we will have to focus upon continuing to improve our customer experience by allowing seamless operation across physical and virtual channels. The industry-specific topics that are on my mind for next year for my utility services board are health and safety, contract management, the ESG effects of climate change and emissions, network and communication tools, and succession planning and recruiting. Of course, health and safety issues are always front of mind for utility services companies due to the high-risk nature of our work. The pandemic has presented an additional risk for us to be aware of, but we need to continue making sure that our employees don't take their eye off of the other risks that are inherent in our industry. For 2021 and likely beyond, we will need to be prepared to make the necessary adjustments to our strategy as things continue to evolve. So that concludes my remarks for today. Obviously, financial services and utility services are 2 very different industries, but I hope that my description of overlapping issues and industry-specific issues for 2021 was helpful. Thank you for your attention and enjoy the rest of the conference.